Good afternoon. Good afternoon, everyone. And I wanted to show you this. This is pretty incredible, huh? I don't know if you haven't seen this today. I'll spare you the sound. So let me ask you, do you, oops, let me get that out of there. It keeps playing now. Let's get it out of there. Oops, bear with me here a minute. And we got all kinds of, there it is. There's my banner. Do you think they can control markets? Do you think they've been controlling markets for decades? Decades. And no question about it. Are the markets rigged? Absolutely, they're rigged. No doubt about it. No doubt. All we have to do is stay on the side that's rigged. That's all we got to do. That's all you have to do. I'm Bag of Dawn. This is Stock Market Caddy, and we wanted to give you a live view. We're actually testing out, and we're also seeing. It's a little bit weird because we can see the YouTube, and there's a delay on YouTube. Let's go make sure that we're live. There it is. Okay. So we not what we're watching and what we're listening to is virtually no delay. On YouTube, there is a bit of a built-in latency, so we can't we can kind of monitor it, but we can't really watch it too much. It'll confuse us, kind of like getting feedback. But let's make sure the volume's up. I think so. There it is. There it is. Okay. So we do have this is your opportunity. We wanted to punch up and tell you what we're working on and what we're doing. Um, our weekly balance usually starts on Sunday nights at 6 p.m. This weekly balance, where the initiation date was on Thursday, the 6th. We booked our profits for the previous week early on Thursday or late Wednesday now, and it was a very handsome week. We've had some great weeks. This is a view of just the Nasdaq, right? So we have multiple views, multiple markets that we trade. We also trade options, and we have multiple accounts. We're not managing anyone else's money. We're not giving out specific recommendations to buy or sell anything. We're just showcasing how we go about doing it, and hopefully it spurs some interest for you to want to go visit our market. Now we have two websites, right? We have a marketing website, and that's just that for marketing. And we're going to redo that, by the way. We refresh that every year or two, and actually every couple of years, and it's being worked on now. And so we'll have a new one, and then we have another website that is just for members, and that is under password control. Base members have access to so much, and annual members have access to everything. And we also hope very, very soon for our annual members to not just have new radars and new programs, which we're working on all the time, but that membership website is going to expand. And it's going to expand hopefully with additional live views. We're very close to probably moving away from the Zoom and using this other technology. broadcasting. But when it comes to and so the just so that you know, if and when we get there, which we should get there in time, the latency, the delay of the video view that will be on our members' website will be measured in milliseconds. It'll be we're hoping to have it down to about 2 to 5 seconds. YouTube, though, when you're watching on YouTube, you have a video setting. By the way, just want you to know that little dial down there. You can set that at 1080p, and that'll give you the best image. But they also have their own delay. All of these social media companies have a delay, and there's no getting around that. So, um, but the other piece to remember is if you have these tools on your desktop, which we that's what we're about, is enabling folks to get these tools on their desktop, then you have virtually no delay. It'll be in milliseconds. Um, depending upon your internet connection and also, proximity to the exchange. Usually it's about 500 milliseconds. Now, 500 milliseconds is half a second, virtually imperceptible to the eye. I have a hard time seeing it. Now the high frequency firms, if you're not familiar with this story, I can share it with you. There's a great book. Was called the I didn't expect to go down this road, but I will share it with you. The gentleman who wrote the book Moneyball, he wrote the book called The Big Short. It was kind of he tried to portray that the crash in '08 was only known by a handful of people, and that's kind of ridiculous. We all knew that, that crash was coming, and and that was probably more orchestrated than Elon Musk. That little rocket landing. I mean, that was an orchestrated hit. I mean, that was so the way they split the baby on that. George W. Bush was going out, Obama was coming in. That was they shook everybody out of their positions. They scared the bejesus out of everybody. That set up the stage for what we've had for the last 15 years. It was in my view, an orchestrated hit. But in the book, the very first chapter of The Big Short, he tells the story about an entity, and doesn't really say who they were, but it was a group of investors that were um, trying to lay an internet cable, a fiber optic cable from Chicago, from New York to northern New Jersey. And that cable, or that fiber optic cable, was measured from outer space, from using satellites, and had to flow across at a precise location. That cable, that fiber optic cable, had to go over mountains, had to go through mountains, had to go under rivers, had to go through cemeteries, had to go underneath people's homes, had to cross counties and states, um, all kinds of things. And it was in the billions of dollars that cable had to be built and put in place, and it had to be done very, very quickly, and it was done very quickly in a matter of months, 6 to 8 months. And you might ask, how in the world did it ever get regulatory approval? And it was a matter of national security, and it was expedited. That fiber optic cable is what enabled them to do that, and build out what we didn't know was coming, but did come, and that is the high frequency traders, the high frequency trading firms. And basically, it enabled them to get tomorrow's newspaper today. And by getting that measured and it had to be in milliseconds. So that's why when you trade, we won't name any of the brokerages, but when you trade and they give you, free commissions, it's free. Ain't gonna cost you nothing. You know, when they give you free commissions to trade this or that or that or this, it's because back then, unbeknownst to a lot of people, we began to see some things squirrely, and it's not it's not really an impact when it comes to futures, but it is in the options and in the stock market, and even to this day, and the brokerages were selling the order flow, because it used to be prior to that, the brokerages, um, to be a brokerage, they had to be prepared to make a market in whatever it is they sold. So if they sold you 1,000 shares of Apple in the morning, and you turned around and you wanted to sell those 1,000 shares in the afternoon, if they sold you that, they had to be prepared to take it off your hands. That was part of the deal. And that's why there was commissions, because in that there's risk. The high frequency firms stepped in and said, "Hey, we can take that load off of your back. You just simply send your order flow to us." Nice, right? So the sheeple out there, when they punch their little keys to buy this or that, um, many times, not always today, but and we're not being brokerage specific by any means, and that order flow can get interrupted and get played between, and you can basically get scalped. Pennies here, pennies there. Now, it may be imperceptible, it may not be perceived, um, and it's the if the tree falls in the forest, does it make a noise if you don't see it or you don't hear it? You might say it doesn't, but there's a cost. Now, others will argue that cost is worth it in the aggregate, because it does what? It provides market liquidity, it tamps down volatility, and it does a whole lot of other things. It also enriches a lot of the people that are in that business and then around that business. By the way, that cable, when they built that and laid that out, they knew in a matter of months after putting it in, it was going to be less than a year, that it was going to be obsolete. But they were so eager, and they needed to do it so fast because they had to get control. Now, do I think that and they replaced it with lasers and whatnot? So we're not doing that here. We don't have that technology. Um, we don't. I wouldn't let it discourage you. I wouldn't let it bother you. Maybe back in the day, it kind of got under my skin a little bit. There were other things that used to get under my skin. It just isn't worth it. It is what it is, and you just have to figure out a way around it. Not everyone's going to have the tens of millions, hundreds of millions to have that type of technology. The people that do and have the political clout and the regulatory clout behind them, are worth hundreds of millions of dollars. We're talking, the folks like Ken Griffin at Citadel. He's got 4 or 5 homes for 500 million apiece, and they're in the club, as George Carlin says, right? They're in the club, and we're not in it. So we're not giving anyone I don't want to be giving anyone the impression that we have tomorrow's newspaper today. We don't. We don't. We have very good technology. Here sitting in my office, I have the fastest internet connection I can purchase. Our members have that too. Again, on YouTube, I'm just letting that you're on a bit of a delay because of YouTube. We're not doing this though. You shouldn't be thinking about trying to pick off trades. You shouldn't be doing that. I don't think off of anybody. We're all about empowering the individual to be able to play this game at home, and to stay proportionate, if that makes sense. But it is a great book, and it's a great chapter to the first book. It kind of sets the stage, and I do the markets, and they always change, right? They're always changing the rules, and they're always going to be rigged, and they've always been rigged. It's been this way for decades, and that isn't going to change. Um, you just want to be able to stay on the side that is rigged. Market's going up, we want to be long. Market's going down, we want to be short. on whatever the market is on an interval of your choosing in an account appropriate, proportionate to your risk levels, and trying to achieve what it is you're trying to achieve. Here, I keep reflecting back to you. I don't define those. Like, we have even programs that, they almost all of them have a frequency setting, and I made the mistake back, some years back, putting one out and set a high frequency program, and that's actually been the most popular video, the high frequency trader. And I have to, to the folks that write to us, which is many, say that all of our programs have a frequency setting. You can set it to run really fast. You can set it to run really slow. And but it isn't a high frequency trader in the description of what those people were doing in the book, right? It isn't that. It isn't that. And one of the mistakes that we see a lot of new people make, new traders make, and I know where it's born from because I made the same mistake, and that is the idea that, if I or if you keep ratcheting down the speed, you keep ratcheting down the intervals, you can get yourself to the smallest increment on any market. I mean, I guess soon we won't have pennies, but we'll have nickels, for stocks. But um, for futures, it would be down to a tick size, and the thought being that you can ratchet down the speed or the frequency down to the tick level and thereby eliminate the risk. You can't do that. You can't. Um, it doesn't exist, right? I'm just letting you know. I've spent thousands of hours developing programs and developing tools. Um, and there's no getting tomorrow's newspaper today. And if you're looking for something like that, it doesn't exist. And if you're looking for something that doesn't exist, you're going to be disappointed. What we're developing though is our tools that can interpret the price action either very fast or very slow and try to give us a measured and proportionate result. I mean, that is what we're doing. But if you have it in your mind that you're going to corner the market like the Hunt brothers, you're going to corner the market in gold, or you're going to corner any market, not going to happen. It just isn't. And even for that matter, as good and as smart as Elon Musk is, and the Feds today with all their AI technology and landing rockets, from landing the booster, and doing all of that technology, they may be exercising control of the markets, and they've done an admirable job over the last 10 to 15 years. But I don't think they're how do I put it, I don't think it's totally safe what they're doing. They may find out. They just may find out. And we will have, when I say we, I'm saying Susan and I and our members that have these tools on their desktop. You will see it first. I mean, it'll light up like a Christmas tree. I mean, and you won't have time, to when I say you won't have time, you won't have time to go to CNN or go to Fox or go anywhere to try to find out what the hell just happened. And it'll happen here. There's a crazy thing that people do. I don't care how rich they are. I don't care how poor they are. You see these YouTube videos when a plane, belly lands. God forbid. Hopefully, you're never on one. When a plane belly lands on the tarmac, and people are getting out of the plane, and the thing's burning, and you see them getting off with their baggage. They're carrying their stuff. So imagine, I mean, you're landing, you're doing something like that, and I hope you're not in front of me, but you got the guy in front of you that is, opening up the overhead bin, and he's got to get his stuff out. Um, People are people. I don't care how rich they are. I don't care how poor they are. I don't care who they are. They have a tendency to want to get their stuff, and to protect their stuff. And they will just react. And they won't be waiting for Dana Bash on CNN to tell them what the hell is going on. And I can describe this to you. I wish I had it on video here. I didn't. I think it was 2013. You could probably Google this, and I was the currencies were really moving around quite a bit, and I was up. It was like 2 or 3 o'clock. I don't do this too much anymore, but I used to. Learned a lot. But I used to be up like at 2 or 3 o'clock in the morning, and I was trading, and Susan's sound asleep. And it's just me. I wasn't on YouTube or anything. It was a relatively quiet night. I think I was trading the Japanese yen and the Aussie dollar, and it was really quiet. Right, I was just doing a few things, and then suddenly, boom, boom, swing machine just exploded. I'm like, holy smokes. Unfortunately, I was on the right side of things. It may have, ticked off, and the yen went. I'll share with you. Some of you may know the story. And the yen goes flying in one direction, and the Aussie dollar, everything is just moving. And I'm thinking, holy mackerel, what the hell just happened? And I'm thinking that maybe there was a nuke or something that went off, right? I mean, and there's nothing. And it was 2013, so I guess Twitter was maybe just coming out of the ground. And I checked the Twitter sphere, and there was just nothing. There was nothing, and there was no point turning on CNN or anything. I was like, "This, they're not going to have it." And it just lit up. And like I say, fortunately, I was on the right side, and kept myself on the right side. And it was a good maybe 10 to 15 minutes later. I think it was came across on the Twitter, and then ultimately on the news. And you know what it was? It was the tsunami in Japan. That's when it happened. It happened like at about 2 o'clock, 1:30 in the morning, 2 or 3 o'clock in the morning, Eastern Standard Time. And just, out of nowhere. I mean, and things like that can, God forbid, you don't want it to happen. I was hoping that it wasn't a terrorist hit or anything of that sort, but it really did take a breath away. And the point being, I guess what I wanted to make is, swing machine, when you have this view of it and you get comfortable looking at it, it just waves in and waves out, right? And you're going to see it, and it moves so fast. By the way, even if you knew, and you couldn't know, right? Nobody could know unless you were, some sort of scientist, whatever. But maybe you could got some warnings, maybe not. But I don't think anybody could know that an earthquake was going to hit, and you couldn't know that there was going to be a tsunami to follow. Um, but if you did know, and it was gonna hit in Japan, what would you have thought that the yen would do? Would you think that the yen would have gone up in value, or do you think the yen would have gone down in value? Because it made a move in milliseconds, and it kept moving. And I knew it had. I did know, because I had the currencies up. I did know that it had to be in and around Japan, whatever happened, because the yen was just exploding, and then the Aussie dollar. So I knew it was something in the Far East. But any ideas what you would have thought? Because I thought, and I had to find out. I didn't find out really until the next day, because, well, and I'll just share with you, had I known, and I did know about 10 minutes later that there was an earthquake, and there was the threat of a tsunami, and then we were all seeing the pictures. I just personally would have thought that the yen, I don't know, just a hunch or a gut, that the yen would have sold off, but it didn't. The yen took off like a banshee. And I'm like, I wonder why. I wonder what was that, and it happened so fast, and it just kept going. And that's just because, there's a lot of smart people, protecting their stuff and managing other people's stuff. And they probably have programs for those types of scenarios. It was kind of like the same reason they even said that, that elephants, when they had that tsunami, what do they call that? The Boxer. Remember the Boxer tsunami or the Boxer earthquake on Boxing Day or rebellion, over in the Thailand, that the elephants have a like a sixth sense, and they go to high ground. The birds get quiet, and here the currency traders on the yen, within milliseconds of that earthquake, started to race higher. The reason they said that afterwards, and it kind of made sense afterwards, I had no idea, but they said that the calculation was that there was going to be billions and billions of or trillions of yen damage, and that the Japanese insurance companies were going to have to pay out damages. So the calculus was that the next day, or that day, I guess they were open that day, that the insurance companies in short order in the next few days were going to have to sell a lot of their growth stocks, or a lot of their holdings, and have to buy yen to pay out the claims. So the hedge funds, what do? They pour in and they buy yen ahead of the insurance companies, which was kind of interesting. Now, it's that's experience. That's a little bit of market knowledge. If but to try to know all of that, and or for something that may or may not happen, in the future, is maybe a lot to expect. So that's why we don't try to know all of that, or the narratives or market reaction, but we just really want to track the money flow. And if we can track people's footprints in the aggregate and what they're doing with their stuff, then that's going to enable us to move our stuff in and out and around them, so that we can extract a positive cash flow for taking on the risk and taking on the time, and doing it. And to get that done, we're going to use technology. We're going to use machinery. So kind of long-winded, but gives you a little bit of perspective of what we're trying to do, and also what we're not. Right. So we're not cornering, but just the same, we have certainly had members say as well, because I've asked them within earshot of all of our other members, is there a holy grail? And they'll say, well, no, no, there really isn't. I mean, that's going to be the individual. However, are there programs? Do we have programs that can run for days or hours to days to weeks, sometimes for months, and feel like a holy grail? And the answer to that question is yes. Yes. Um, but they will stop. They will slow down. They will their characteristics and their ability to make money will vary, will change. Why is that? Well, the conditions on the ground change. The market changes. It's a different game, right? It's a different game. And I didn't watch the Super Bowl. I hope you guys enjoyed it. I hope you had money on the winning side. But I can gather, maybe from the score, that that Kansas City maybe made some adjustments to their game, at halftime, because um, the first half didn't their game plan wasn't working out, and they still came up short. As a trader at home, we can give you the knowledge, we can give you what we do like to do, we can give you the tools, but you'll need to you know, learn those tools, and then you'll need to execute those trades. And how fast you want to run them, how slow you want to run them, and when you want to run them, and how much leverage you want to run. And do you want to run quarterback sneaks? Do you want to throw the ball over the middle? And right now, by the way, as we're looking at this, you might, what's he doing now? Well, we started here. We started at 30,000 on February 6th, which was the end of the day on Thursday. We transferred out our profits from last week, and then we put ourselves in position for the Friday afternoon sell-off, which we did get. And then we also took it over the weekend, and we thought maybe the market was going to repeat itself and take us down, Sunday to Monday. That didn't happen. So, we're off of our weekly high water mark. And and then I also um we were running the 2 minute offense, and I made a mechanical decision that I would suspend that trading, and I would put on a mechanical trade. And I have wood on the trade. I have wood on the week. I have plenty of time. It's only Tuesday, and I might be right. I might be wrong. I have limits on how far I'm prepared to go on this, but I was putting myself in position, and I still think we might get it. Not suggesting you do anything with your money, but a turnaround Tuesday where they decide to take it down. And so I have just one NQ on, just being patient, just letting it, let it sit. I have a lot of other visual tools. I have a lot of other machinery that I can look at that you don't. We can't show you everything here, and certainly in a 1 hour YouTube session, but I do. So I wouldn't do anything with your money here. We don't, and I wanted to punch up too, because I don't always want to show just when we're profitable. We will have drawdowns. We will. And we will have losing days, and I will have losing weeks, hopefully not too many. I have a daily plan. I have a weekly plan. I have a weekly objective, profitable objective plan. Equally, I've got to be prepared that my losses don't exceed that, right? So I'm never more than one day away from getting my account back in order. And on a weekly basis, I'm never more than 1 week away, right? So I won't put at risk, multiples that are going to put a big fat hole in the side of my boat. It's going to take me months to recover from. That's not going to happen. When you're trading futures, in this screen here, we usually keep up the NQ because the NQ is so popular with everybody, and but we trade other markets as well, that trades that we have working. We have multiple accounts, multiple markets, options, whole 9 yards. But you don't have to use a mini. So if you're looking at this and holy mackerel, he's got 33,000, or holy mackerel, he's down 2,100. I can't be doing that. Just understand, the smallest increment trading vehicle for the NQ would be a micro, and that would be 1/10 the size. So if you were trading an account that had $3,300 in there, could you trade a micro? Yes. How much would you be down? $211, 1/10. That's the smallest you can go. However, there are other markets that you can go even smaller than that, like the ES or the Russell. So it is scalable. The important piece here is that we're always trying to convey to everybody, though, is you need to start thinking about how you're going to start making your decisions, ideally in a mechanical or in a robot assisted fashion. If you are making your decisions, on the money, then you're going to struggle the more active you are. So you may have had a very successful career doing whatever, and whoops, oh, there's Amazon, not at us, but someone. Let me address Abby. Bear with me. Everyone knows Abby is security. She got a job. She's at the front door, letting us know every time Amazon's up and down the street, which is seems like every 15 minutes. But Ted does the mail. He literally brings in the mail. So they're workers earning their keep. But where was I? I forgot where I was. I was out on the front lawn, and what was I doing? Um, I had a thought, and but I guess if you're making decisions off of the money, you may not realize it, but you'll be making decisions off of fear and greed. And if you've had a very successful career, you may have been a very successful investor. You may have bought and sold stocks over the years and done exceptionally well. And good for you. That is different than actively trading. Big time different. It isn't the same at all. And if you bring that approach into trading futures or even trading options, um, you may wind up in a place where you give a lot of money back, and it might screw up your ability to trade intraday or trade actively, and it might even screw up your confidence to invest. You may get ruined that way. Um, when we go through the Q school, we break that out. I totally understand the difference, and I do, and I can explain it in detail, and we will spend good quality time together. And you want to decide when you have accumulated the assets that you want to put toward the market. And I don't think it should be everything. I don't. But you've got to decide, you know, what amount of money is going to be investable in what bucket, and what bucket is going to be, tradable. And that's going to be, your call. And then you just want to do it proportionately. But it's different. It is very different. And trading futures is very different than trading options. If you want us to plug any of your markets into Swing Machine, let me know. I'm going to slide over here while we're just kind of being patient here and see if we do get this little little turnaround Tuesday. Let's go take a look at the ES. This is the ES, this little Renko chart. I'm gonna turn that down there. Sorry. Um, and let me get a pen here, writing pen. We've done this now a little bit. It's really been a little maddening. Not to us, but I mean it might be to some here. So this is, let's get this marker. This move from here, this is Sunday to Monday 2 weeks ago. And then we up and we came right back. And then this was Sunday last week to Monday, and we came right back. Crazy, right? And then this was Friday, and then Sunday night, we did not come down. We didn't. All we've done is this. That's all we've done. That's on the ES. The NQ looks virtually the same. Now, if we do get above here, then yeah, we could break out, and there could be some stops sitting up there. So she is trying to do it. The ES is trying to do it. So I think today's going to be an important day. What we need and want to see, for those of us that would like to see a bearish move, is not get above any of this. Certainly not get above that. Give us another pivot down. Give us the C point down. Give us that red dot, and let's go after this level and see if we can take that out. This one here, probably take that out, and then see if we can get down into here. That's and I've been stocking, as everyone else. We were stocking that in here. We were stocking that in here. And I'm back at it again, trying to get that move, because that move will pay. And especially if this doesn't hold, it'll pay, quite a bit of money. But I may not get it. I may not get it this week, but we'll see. That's what we're trying to get. It's a measured move. And we're using some of the machine to, but I still, even though I'm trying to get that, I still have a weekly objective that I got to make. I still got to trade. I still got to get that done. So now let me just show you. It looks exactly the same. Here's the NQ, and this brick size is approximately the same, and it's 20 points a brick, kind of slow. And we're doing, this is us right here. Here's the C point. These little C points, this is C point long, C point long, C point short, C point short, and they're beautiful tools, especially when you play them very, very slow. And if you wanted to play with a 9 iron, we've done this with the ES. And if you wanted to do this, the challenge is you've got to get these signals being sent to your phone, because you don't want to be sitting here waiting for them. But this C point long, this green dot here, it does not show up until this brick opens right here. Okay, so it doesn't show up until this brick is completed and that one opens. Once that opens, you could have, measured in milliseconds, a signal to your phone. Not from me, but from you. You would have to set it up. We show you how to do it. You could do it. You could get this tool and get it on your desktop. And now, so the question is, well, could you have made 400 bucks? This brick is 400. Could you have made 400? And by the way, you can see this. I'm not changing that. The machine is doing this right now. I'm saying you might want to favor the long side, which I particularly don't like, but it is what it is. Could you have made one brick there? 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. You would have lost on this one. So a little about 15. This one you would have lost 15, and you would have lost 2 and a little bit. So it's 15. So you would have had, out of all those trades, you would have won on all of them except one, and you would have netted about 13. About 13, 12 to 13 times 400, whatever that is. That's how much you would have made if you were trading a mini. If you traded a micro, it'd be 1/10. If you were trading options, maybe even better. The most frustrating part of this would have been if you were sitting here waiting for that. It's going to be a rough way to go. If you know how to program it, if you have it and you can program it so you get alerted right away, that'd be better. But the biggest frustration would be you'd be leaving a ton of money. As you can see, you'd be leaving a lot of money on the table. So you may start out thinking, I'm going to trade that precise. Financial market trade room. What tool is this? Yep. This tool. So you start out thinking, I'll just answer, I'll just address this. You start out thinking like, oh, I'm going to trade like super precise. Then as you get wood in the trade, as you get wood in your account, as you get your confidence, you're gonna relax your grip a smidge, right? Right. You relax. Let the club fly. When you get in trouble as a trader is when you don't have that confidence, you don't have the skill set yet, you don't have the tools, and you just, you got a bucket of golf balls, you got a bucket of money, and you're just letting the club fly, and you're spraying them all over the place, right? Like at the driving range, right? Drive for show, I mean, it's like, it's fine, I guess, if you're, trying to impress the kids playing miniature golf behind you, but on the driving range, or the girl in the next stall next to you on the driving range. But it's not going to play on the weekend when you're with other folks that know how to play the game of golf, right? So when you learn the game of trading, depending upon what how you're going to approach it, you just got to know that in the beginning you might be, super precise, but you'll begin to relax your grip a little bit, and you'll get some of these. So the question is, and I'm going to do this. I'm going to click on this. It's kind of cool. There we go. So the Financial Markets Club trade room. Oh man, he's got a trade room. Oh, is it your trade room? Uh, we don't do trade rooms. Um, That's what everyone else does. We don't do that, but that's okay. This is everything that you see here is proprietary to us, and we have over 70 proprietary tools and growing, and they're all original code. And this is an algo. This is an algo. I'm not printing it. This is called the trend caddy. This is the four caddy. These are our swing points. We call them the ball markers, and then these little dots are our C points. And it's very simple. We got plenty of other tools for this as well. The style of chart is a classic Rinko, but we also trade custom Rinko. And let me erase some of these markers here. Let me back these off. And I should point out why I don't have any subscribers. Yeah, I wish you well. Um, this is financial markets. We don't do trade rooms, right? Back 20 years ago, before I'm trying to erase that. Sorry, there you go. Um, Let me put our little banner back up there. Sorry. Um, I did go into a trade room or two, back in the 2000s. They had them, and I didn't like it. I didn't like. I didn't want to hear a bunch of people hooting and hollering or the cha-ching, cha-ching, and all the silliness, and listen to somebody else's music or listen to somebody else rant and rave or anything else. I didn't want to hear it, and presumably you don't either. And so we build now. I will do these little YouTube sessions just to create some awareness, but it isn't a trading room. So, and if you're looking for a trading room, if you're looking for somebody to give you the specific trades, I get that. That's what everyone does. We don't do that. No, nope. Um, for me, and I'm just going to put us back to where we be. Um, let's go back here. Um, you get a person gets self-esteem from facing a challenge and working that challenge and overcoming that challenge. And that's how a person gets self-esteem, even a kid, right? Even a kid. That's how they get it. So these parents that have children, I don't have kids, didn't have kids, but they might want to think that through a little bit. It's one thing, when they're kids, you're certainly going to help, but when they get to be, 20, 21 years old, and mommy and daddy are, calling the dean at the college because, little Johnny can't attend his college class, and, mom or dad want to sit in on the class and audit the class for him, or they want to attend the job interview. Have you seen some of that? Oh my God, they don't get it, because that kid is never going to have any self-esteem, because he's never, they've been, wiping their fanny for him. Um, if I go out to play golf, when I go out to play golf, right, I want to play my game, right? I want to choose the club. I want to hit the shot. It's my afternoon. It's what I want to do. Now, I like to, maybe listen to what other folks got to say, but that's what I want to do. I don't want to play somebody else's game. I don't want someone else hitting the shot for me. How much fun would that be? I mean, how much confidence do you think I would get if I let somebody else hit the shots? So, and I had a person still with us, back, years ago. And I remember he called and he said, I have this, which is what everyone does, so they're running trading rooms, and then they have, subscription models for this and that. And he was paying a guy, that was giving him, 10 option trades, um, a day. And I said, okay. And, And I said, so what do you do with that? And he goes, well, he gives me 10 and then I pick and choose a few that I want to put on. I'm like, okay, all right, well, that's good. And I go, how long you been doing it? He goes, I like 3 or 4 years. I'm like, okay. And I said, how's that work for you? He goes, well, I haven't lost any money. I haven't made any money. I'm like, all right. You've been doing it for 3 or 4 years? Yeah. All right. Do you have any idea why and how he's picking them? No. Do you have any idea of how and why you're picking them? No. I'm like, all right. Have you learned anything? No, I haven't learned a thing. That's not so good. That isn't so good. The person's never got any confidence. It's not any good. So these tools that we build, it takes us a week to 10 days to send them all to you. That's how long it takes us. They got to be individually set. They're encrypted and it takes me that long, one by one. So it takes us 3 weeks during the Q school to share with you. Some are totally proprietary. Some are black box, even black boxed to us. Not black boxed to deliberately hide anything, but some of them are just a complete algorithm, even black boxed to us. Nothing on a screen, no moving average, no stochastics, no MACDs, none of that crap. A completely an original proprietary code that looks at the data stream of maybe 2 or 3 or more other data streams in making buy and sell decisions. And during the Q school, we go through just about all of them, just about, and we will share with you what the concept is and how we go about using it and what we're trying to do. Not many people are going to do that. Not likely. I don't see anybody, and I've been online, so we've been doing this a long time, right? We've been doing this since the early 2000s. Stockmarketcaddie came out of the ground in 2012, 2013. We've been doing this a long time. I don't see anybody doing what we're doing, not at all. And I don't see anybody that is prepared to show you what we're prepared to show you. In fact, and I'm happy to answer any questions, right? So I don't want to ramble on and on. Um, and we must be fishermen. Yeah, yeah, you gotta be fishermen, fishing. Yep. And you gotta get the fish in the boat. You gotta get them on the stringer. Absolutely. Let me show you real time. So this is Swing Machine, right? It's just one algorithm. By the way, in we have folks in here, we can trade from here, we can trade multiple time frames, we can trade down to a tick size, we can trade multiple markets against each other. All can be robotic. Yes, we can go back in time, the last 5 weeks, the last 2 months, and look at models, how many wins, how many losses, what the run-ups, what the rundowns were. But more importantly is not just how to do that, but how to interpret that and how to use that is what's, extremely valuable. It isn't what you think it is. Everyone thinks like, "Well, show me that performance. I want to know what did that do?" We're not running a mutual fund here. That's fine if you want to take, your 500,000, your $1 million in your IRA account, and you want to, spread it around some mutual funds. And yeah, you're probably going to want to look at, a mutual fund performance record, maybe draw some satisfaction from it. I don't know, and give it to them. That isn't us. We're not managing your money. Um, no, not set up to do that. I'm not even giving you specific recommendations to buy or sell anything. We're trying to give you the tools so that if you want to manage, maybe you don't want to manage that whole thing. Maybe you want to take a portion of that and see if you can trade it to create some cash flow and add to that, that amount or another amount. Um, that's what we're about. And and a lot of people start out, they just start out in the same place. They just throw up, put in money into a brokerage, put up a time chart. They get a daily. They learn candles from the 1970s. They put up stochastics. They put up MACDs. They put up moving average. They argue, is it the 2? Is it the 4 over the 8? The 3 over the 9? And then they go down to an hour, then they go down to 15 minutes, then they go down to 5 minutes, and then they just go down that rat hole, and it is a rat hole. And I'm just going to try to save you from going down that rat hole. Um, in the early days, I went down that rat hole, so I kind of know, right? I know what that is. But let me show you something that they're not going to show you. So here is, I'm going to show you swing machine on the S&P 500. So we have swing machine, right, that can trade not just futures, but also stocks. And here it is. So we're going to go to, let's see, I'm a little out of sequence here. Yeah, this guy's out of position here. All right, so here is swing machine, and it's blue because it's stocks, right? So just ignore my writing here. So this is the S&P 500 stocks on a daily interval, and it's blue so that I know that reminder that it's stocks. This P&L here, this is based on a $10,000 trade. We have to put in, because it's not a futures contract with a preset leverage, we got to put in an amount of money to calculate the purse. And let me just show you. You could come here if this is on your desktop, and let's see here. No, she's hiding behind here. Let me see if I can find it here. Let's see. Oh, here it is. So, okay. Oop. Oh, dang it. There it is. All right. So right here is, see, this is futures is false. You could say, it's true, but and its stocks is true. And here I put in $10,000. If you wanted to put in $5,000, you could. If you wanted to put in $50,000, you could. And and you may not be even trading, which I think would be a good idea, not to even trade that much capital. I would use options, but as an example. Now, what I'm going to show you how Swing Machine is positioned in every S&P 500 stock. So if you are subscribing to the hockey captain up in Connecticut who went to Yale, and he talks to you like you're a moron, I'm not going to do that to you. And I don't have a crack research team either. And he's not going to show you how he's positioned on every single stock. He isn't. No, he's not going to show you the entry. He talks about time stamping this. I'm going to show you right now in less than 5 minutes. We're going to go through every single one briefly, but we'll show you. So the top stock for us on the S&P 500 is United Airlines, oddly enough. And I just attribute that to the retirees. I mean, they are living life like it's a beautiful thing. I mean, they're all over Florida. Try to drive someplace. They're all here. Spring Machine is dipping, but it went long 108 days ago. At what price? 46.01 on September 6th. So if you had put $10,000 into United Airlines at 46.01, yes, you'd be up 124%. That makes sense? That's what it is. This is just shorthand, so we don't have to look at the date, but it was 108 days ago. Okay, so now we come down. I'm going to just scroll down, and let's put it back here. And we got some others in here. You can, and if you don't see a stock, if we don't catch it and you want me to punch it up, I will. But let's come down to this red one. What's going on here? Maybe, excuse me, hold on. Maybe your Edward Jones guy put you into Moderna, right? Back during the days of COVID or something. And he left you there. He went to the mall shopping. He put you in. Don't worry about it. It always comes back. It's the market. Things go up, things go down. Well, if you had done that, it would have been okay, depending upon where he put you in. But 157 days ago, Swing Machine would have said, hey, you know something? That thing is starting to go down at 121.18. If you had gotten out, you would have saved yourself a 74% haircut in your portfolio. See, they always call you to sell you shares. They never call you to sell anything. When is the last time any broker ever asked you, hey, maybe it's time to get the hell out of this thing? Never. Never, because they have no discipline to sell. They have no discipline to get in either. But their discipline is to get your money. And you're going to hand your golf clubs over to some, you know, guy or gal who doesn't know, you know, doesn't know what he's doing, really. I'm not about to do that, but you can if you want, but I'm not. An aggressive trader like Keiko, he could have come in and if he had shorted it, so you would have saved yourself a 74% haircut. If Keiko had shorted it, he'd be up 74%. Now, if you used options, your percentage return could have been much quicker, much faster, could have been multiples, could have been what Nigerians. I got a 10 bagger, got a 5 bagger, bang, as he likes to go, bang, right? You see him, right? uh, but we're showing you. All right, so let's keep going. Now, what you want to know is I'm going to just keep going. We don't have time to go through every stock, but you can see we're profitable at this point. I'm going to go all the way down to where we don't have. I'll show you. Now look at all the shorts, right? I mean, here's AMD 70 days ago, short. Here's Newell 5 days ago. Look at that, 23% in 5 days on Newell. Here's Amazon. Well, Amazon's still long. Meta is still long, but look at all these other stocks, right? So let's just keep scrolling. So here, this is how we're positioned. Now, there's also some trend information over here that we're not, we don't have time to get into. So, but Swing Machine is giving you a lot more, but let's just keep going. How many stocks out of the 500 are profitable? No, we keep going, keep going, keep going, keep going, keep going, keep going, keep going. And let's go, keep going. I don't mean to make you dizzy. All right. So we got a couple of yellow ones there. I'll show you. Yellow means we're flat. So give or take, we're probably roughly at about, I'm going to say maybe 390 to 400 stocks we are profitable in out of the 500. The yellow ones mean we're flat in money. And by the way, those white boxes mean he's trying to change. The remaining 100, which is kind of low for us, usually we're around we're profitable usually in about 420 to 430. But here are the drawdowns. So these are losing. They're drawing down. And what's the worst drawdown? Let me show you. Let's go see what it is. And the worst one is NVIDIA, 12%. That's the worst. That's it. 5 minutes. 5 minutes. Let's go look at the NASDAQ 100. Let's go do the same thing. Here's the NASDAQ 100, Swing Machine, and percent return. Moderna is the top one. So out of how many stocks are we profitable in? How many signals out of 100? And let's scroll down. We usually around 80%. There it is. So out of 100 stocks, we're profitable in 86 or 87. And then the others, yep, we're having a draw. And what's the worst one is this one. And I can't see who it's probably NVIDIA. Same amount. Not bad. Am I listening to Kramer? Am I subscribing to IBD? Ugh. Am I subscribing to anything? No. Nope. Now, our monthly members get to see we go through all these algos every night, and they get to act or not act on it on anything. If you want it on your desktop, you need to become an annual member, and you'll have Swing Machine and other tools on your desktop. Um, what else I want to show you so many other things. If you like to trade options, here's the options club selector. And this tool is called the SMC Options Defined Risk Club Selector. And this tool will tell you the stocks. And let me put a reference row here for you. Edit page. And I'm going to put in a reference row so we can see them. I'm going to hit OK. I'll put numbers over here. And so here they are. So these stocks here, they're not all of them, but let me I'm going to do it this way. I'm going to scroll down. And there they are. So we got, as real time, 32 stocks that it's actually not only recommending, because see, with options, you got to get the timing right. You got to get the direction right, but you also got to get the implied volatility right. Most option traders know that options has something to do with implied volatility, but they're not exactly sure, and their mind fogs over, and yeah, it's got something to do with volatility, but I don't really have time for it. I'm just getting an option on. I'm going to get myself that 5-bagger. All right. Guy cracks me up when he does that. It's really important. It's really important. The guys who wrote the option formula, a guy by the name of Professor Black, Professor Scholes, they got the Nobel Economic Prize for writing the option formula. We use that formula here. It works for them. It works for us. See, so our members will come here first, and then they will look and they'll say, hey, Hologix, the option club selector is recommending a call. Now, you could buy a call, you could do a call debit spread, you could sell a put credit spread, you could do any number of things that you want to do. You don't have to do it, but it's giving you the suggested configuration based on the formula of the option pricing. Also, if you want to come here and get your trade, like this is Newell, got crushed the other day, and it's now suggesting a call. If you want to take Newell and put it into a chart and look at it any number of ways you want to look at it, fine, go ahead and do that. We don't have a problem with that. Where you're going to run into problems as an options trader, though, if you go to a chart first and you don't understand the math behind the option, you're probably not going to, I mean, you're going to hit a few, but day in and day out, you're not going to do that. You're not going to get it done. I don't think. So we do the math for you. Well, the machine does it. I asked Susan to write it. Like, Susie, this is the formula. This is what I need. Please write the math. And there it is. Tesla keeps going down and down and down. It is recommending a call debit spread, right? Now, where on the delta you write these or set them up is going to be up to you, but that's where you would want to be. Over here, these are the on the short side. So I wouldn't rush out and go put these on just to put them on, but as an example, I just want to show you what our members are doing, and that's where it's going. And then if you like to do iron condors, which is a neutral strategy, so they show up on both sides of the ball, and here are the iron condors, and these stocks represent the best opportunities for iron condors. If you want to structure it a little bit different and you have some option savvy, no problem. But you're going to do a lot better here. Our favorite thing to do is put credit spreads and call credit spreads. And Susan likes to go in and do them low on the delta, just below at the money. Mhm. She's playing for second and third place at a horse race. She's playing for show money. Really, really good. It's a great way to go and just stay active. As an example, maybe you want to know before you put on a trade, what is this done? This is the SMC options expected move radar. What in the world? Wait, what are you doing here? Well, maybe you want to know in 5 days of the S&P 500, what stock is expected to move the most, up or down? This isn't directional, but what is expected to move the most? So we can sort. This stock always comes up. It's fine. I think it's a intraday darling. I've never traded it, but here's one here. Western Digital. The 5 day expected move is 11%. That thing is going to move $10, $11, either up or down. Now you might go in and look at it and say, well, of course it is, Don. They got earnings tomorrow or the next day or 3 days from now. That might be. They probably do. But the market knows, right? What is known, what can be known is known in the market. They know. They know. And that's where the implied volatility and all that comes from. The options are very, very good. So you may want to, these are the stocks over the next 5 days that are going to make some of the biggest moves. Maybe that's where we want to play. Maybe you would rather, maybe you're doing some other strategy where you're selling some puts and calls and you don't want movement and you want the stocks that are going to move the least. And it'll be these stocks, J and J. It's going to be like watching, paint dry. It's not going to do much of anything. Maybe that's what you want to do. Maybe you want to sell a put on it and just collect the premium and move on. You can, now we go out 1 day to 45 here and we can punch up anything. And even on the SPY itself right now on a 1 day, the SPY is moving about 1% up or down right now. We're moving about 1%, which is beautiful, beautiful, nice volatility, up and down, down and up. But this comes from, not from us, it comes from the options pricing itself. Let me show you something else. Let's go take a look. What about the, oh, if you like to use moving averages, we don't much, but we can come here and here's the entire S&P 500. You put any stocks in here. This is the 5 day EMA, the 10. Let me widen this out here. The 10. Let's see, there we go. The 20, the 50, the 200. And we can sort here and what stocks are racing higher? These stocks right here, the 5 day. A lot of those Edward Jones brokers and brokers, a lot of times they won't call their clients and they won't put any money in unless the stock is over the 5 day because they know the person's going to go and look like, well, what's it done in the last week? Oh, it's up. Oh, okay, here's 10 grand. That's where they go. Mm. So these are the stocks trying to pull the market higher right here. Now it's not to say that this isn't an investment. This is a trade. And many of these though can pull back. Like this Rockwell is we other ways of looking at it, but it's been going up and probably gonna be ripe for a pullback. Here's Intel for some reason, and that one's running, may have earnings. What's dragging the market? These Lumina, Tesla. Tesla's been getting crushed. They're all. Did you hear what Tesla did? Did you hear what Elon Musk? He's got a software kid, a 19-year-old software kid. He's 19, and he's got the moniker. You may have heard, Big Balls. So Dana Dash and everybody at CNN and Aaron Burnett, Elon Musk is taking his orders from Big Balls. And they're all Muffy. Can you believe it? How disgusting. So they're so upset about it. What does Elon Musk do on his Twitter account today? He changes his moniker to Harry Balls. And Dana Dash reports on it. Elon Musk, the man protecting democracy, has just changed his moniker to Harry Balls. Oh my God. They don't get it. They don't get it. Not to go down this rat hole, but Joe Rogan had a great analogy, and I do think it's happening. And he said it is the buffalo effect. Do you hear this? And he said the Dems, the libs, anyways, the libs, they're doing what the Indians used to do to the buffalo. They would herd the buffalo on the plain, and they would run the buffalo herd, horrible situation, over a cliff. And the buffalo would just run over the cliff and fall in to the valley. And down below, the Indians be collecting the buffalo and be eating all winter, all the dead buffalo. He goes, that's the libs. They're not going to change. And Rogan's point was they're not going to change direction. They're not going to stop. They're not going to turn around. They're not going to change direction. They're just going to all run over a cliff. They're going to take themselves completely out. They're going to be extinct. It's a beautiful thing. It just tickles me to no end. I hope it tickles you. If it doesn't, you may not want to, but whatever. We don't talk politics, but and we have members on all spectrums. This one beautiful thing about the markets. I don't care if you're a liberal. I don't care if you're what you are. Everybody likes to make money. But look at this. These are the boat anchors. Right? These are the boat anchors. These are the stocks that are dragging the market down. But it doesn't mean that they can't bounce. They can. They can. And getting on those. And when we trade our options, we love to do what type of trades we like to put on the counter trades. That's what we love to put on. I'm reminded the very first job I had to go for an interview for it. And I was in my 20s, and I had an interview with this guy. It was down in Longboat Key, and I spare the story, but the guy said, "Hey, look, you're not really suited for the job, but you want to come meet me early one morning for breakfast? We're having a national meeting in Longboat Key, and you can come." So I was living in Miami. I flew to St. Pete in the morning, rented a car, didn't have GPS. I drive down to Longboat Key, and I was there when the guy came in, and we went and had breakfast. And it was his national meeting, and all the other salespeople were like 10 years older than me, and they were all walking in. And there was one guy in particular, and he just caught my eye, and he's dragging a boat anchor, and I couldn't help. I was interviewing this guy. His name was Martin. I'm trying to focus on Martin, but I see this guy. He's like one of the reps. He's like 30, 35, and he's carrying a boat anchor with him. And I saw it, and I just couldn't help it. I said, Martin, I said, I can't help but notice. I said, why is he carrying a boat anchor? He goes, because his sales suck. He goes, whenever he goes, the guy in the bottom gets to, when you go to the national meeting, you got to carry the boat anchor around. And when I finished the interview, I said, Martin, I know I'm not 30 years old. I'm in my 20s. I know I don't have this, I don't have that. I said, but if you hire me, I promise you one thing. I'll never be carrying that boat anchor, ever. He gave me the job. And I never did carry that boat anchor. You want to carry that boat anchor, you listen to the Nigerians. The Nigerians would charge you 15 grand. You want to fly out in the Nigerians? You fly out to San Francisco, and you probably get an Uber out to, out to the vineyard, and cost you 15 grand, and you can have some wine and cheese with a hoi polloi, and they'll probably get up there and maybe sign a football, and you can fly back, and you can say, for 15,000 bucks that you met the Nigerians. I guess that's probably a pretty good deal. Some sucker paid 56,000 bucks. You imagine that? They paid $56,000 for a seat a 50-yard seat at the Super Bowl. Those people are in this market. They're in here. They're here. You want to listen to them? These can bounce. This other tool, what we can do, this can automatically be sorted. The overall breadth of the market, please don't pay any attention to this. This does have to be done mechanically, but what we can do is we can calculate the overall breadth of the market. And what we want to know is, because we know the sheep follow the moving averages. So what we want to know is what percentage of the S&P 500 is over every single average. Don't pay attention to this now because this is not accurate. It has to be done semi mechanically. What happens is, though, when the overall breadth gets down to like 10 to 15%, you just want to buy the S&P. You just want to buy the whole dang thing. And when it gets over 80%, you just want to get out. If you want to short it, fine, but you definitely want to get out because the thundering herd is headed for that valley. And they're already coming out, but they've already. So the overall breadth is around 50. I want to say it's around 50, but we don't count on that as an exact interpretation. So let's go look at the VIX, though. Oh, here's another tool. This is called the Pebble Beach. We love this tool. This is SMC Pebble Beach triggers. We use this for stocks. You can use it intraday. And here are sell and buy triggers. And this is the entry price. This is the stop. And these are all today. So we have a total of maybe 15 signals. We're profitable marginally. Same thing, $10,000. So this is 3.6%, 2%. But we're profitable in all but 2 or 3. And this thing does this day after day. Before we had Swing Machine, this is what we did. This is what we did. And it's a beautiful tool. And it can be on your desktop. The story behind this tool, we tell you what the story is. We tell you specifically what it's doing. It is reading candles, and it's also doing much more. But it is reading candles. In the early 2000s, I sat down in the office for a 3-month period. I traded about 600 times. I told Susan, I'm going to do something very specific. I'm going to trade on a 13-minute chart, and I'm going to do it for 3 months. And this is what I did. I didn't have it on a daily. I did it on 3 months. At the end of the 3 months, I had made 600 trades, and I had won about 400. And I made about 75 grand. And Susan said, that's great. Let's do that, Don. I said, no. I said, you got to be kidding me. I said, I will be nuts. It was insane. It was so tedious, and I was probably using way too much capital. It was so tedious that I'm like, I can't do that, Susan. I can't sit in front of a screen and be reading candles day in and day out. I mean, I'd be nuts. So what are we going to do? We're going to write a code. Pebble Beach. It's beautiful. It's really, really nice. As an example, and the VIX fear gauge. Let's get over here and look at this. Let's go look at the VIX. Risk on. It's been risk on for 19 days. Spot VIX, same thing. Right now, there's no fear. There's none. No fear. Skew. Uh-oh. The skew. Skew's trending up. The skew is at 167. Uh-oh. What does that mean? We know. Our members know. Yield curve. So just a glimpse. Over 70 tools. Not to mention the trading robots, right? We can get these tools to be trading. This is a beautiful tool. This is called the brick size calculator. If you're trading point and figure, you're trading Rinkos, you're trading range bars, How do you determine what size bricks to use? This tool. What is that based on? Well, it's based on what the market is doing, what that particular market is doing. So the oil, the CL, if you want to trade that intraday, that's about, you want to be trading at about 5 to 6 cents a brick right now, but that could change. We've seen the NQ right now. The NQ, that chart I showed you earlier, is about 20 points. Right now, it's about 17. We've seen the NQ get down to 7 points. And then we've also seen it go as high as 25 to 30. This keeps our trading, if you're using price charts, keeps your trading consistent with what the market is doing. Because see, if you trade point and figure and Rinko and range bars, and you're sizing the bricks on the amount of money that you want to risk, well, the market doesn't care about how much money you want to risk. And your trading won't be consistent. Um, let's just slide over. So I'm going to slide back. Let's go look at the intraday. I'm going to let you watch. I just wanted to give you a glimpse. Right now, this 2 minute is kind of dipping a little bit. We're going to carry this bugger into the evening. We are. I've got nice wood in the trade, not in this specific trade, but in the weekly trade. And I will do this sometimes. I will do it. It's just what I like to do. Susan probably won't. You may not. Maybe not in the beginning. You want to stay, focused and get your fish in the boat, as Keiko is saying, and then then go from there. But I do. I will do this, fair amount. Done it the last few weeks. I'll get some nice intraday trades under my belt. Get some wood in the trade for the week in my account, and then make a directional bet what I think is going to be in play for the next couple of days, and see if I can ride it out a little bit. That's me and what I'm choosing to do here. But there are other markets, other things, and that's just individual style. You're going to play, you play golf. You're going to play it different. Everyone's going to have their own game. You're going to do your own thing. That makes sense. All right. So I rambled on a lot of different things, but we do these things just to show you what's possible, and and there's so much, but we're not trading greed and fear. We're not, and we're going to do everything we can to get you over that hump. So don't give too much care for the fear or euphoria gauge on the lower gauge on the lower TF. No, that's over here. Euphoria and panic over here. Um, this is more important. You can trade it. Um, we can trade it robotically. We can teach you how to trade it. We will during Q school, but it's usually after the first week. We can use this part of Swing Machine to do what? To counter trade. It's easier with options, and but you can do it. You absolutely can do it. And let me just show you what I mean too, so we get an idea. We've shown this, but we'll show it again. I'm going to change the VIX to a daily right here. I'm going to change the VIX to a daily. So the VIX is giving us a reading at -40. Now, I don't know where that ES is right now on a daily. I got to put it in a daily. But if the market is in balance, then this ES should be at about 60. Let's go see where it is. It's at 50, right? Right in here. So the market is in balance. It's actually a good thing, right? I like it. It's nice. It's right, and it's right in the middle. But we're not going to be here much longer. We're not. And this is the trade. And this is now, when you join Stock Market Caddy, I know you want to trade like the next day and you want the big trade, and I can't manufacture it. It's there when it's there. What we're looking for is, we want one of two things. We don't always get it, but we get it quite a few times a year, and it presents for a really, really good opportunity. So let me see if I can. So what we want to see is we want to see the VIX here, and we want to see the ES on a daily basis here. That's what we want to see. And then ideally, we want to see the skew um, very high. And what are we going to do? We're going to sell it. And we're going to use options. I'm going to go out 35 to 45 days. That's the short signal. The long signal is just the opposite. The long signal, we want to see the VIX up here. And we want to see the S&P down here. And we want to see the skew low. Now, it's very difficult to do this because when this happens, the crowd is on the other side. Warren Buffett had an old saying, still around, said when they're crying, they would be crying, the VIX would be very high, the market be selling off. When they're crying, you want to be buying. And he's right. And when they're yelling, when they want to tell you how rich they are, when the VIX is down here and the market's up here, when they're yelling, you want to be selling. Or when the VIX is high, you want to buy, or when the VIX is low. But we also want to look at the S&P because we want to get in proportion. Where are we now? We're in the middle. We're right here, and we're right here. This is a difficult place to just go in and get options on for 35 or 45 days to play the S&P because we could go either way here. And if you've already done it and you're already in position, then you've already, you're in position. And but here, and when they're in the middle, it's difficult. And we're not putting on options here. I'm not pulling up that screen, but intraday is intraday. As an example, it's a beautiful way, beautiful way. Now we have another tool that we call Nicholas, and Nicholas is measuring it. Each chart takes in all four markets, takes the data stream of all four, it takes the data of the VIX, and it takes the data of the 10-year Treasury. And it makes a decision that it's either to be long or short the market on a daily basis. And by the way, the Nicholas is long. I wish it wasn't, but it is. Yeah, it is. We'll see. It doesn't get everyone right, but it can really, but it can't get bias. So I'm going to erase these as an example. So we don't let anyone buy these tools because they're ours. They're our intellectual property, but we do lease them. But you have to get an education on how to use them once. You guys just do it once. You don't have to, but because we don't want you to drive the Lamborghini into a telephone pole. Oops, we'll put that back to a 2-minute. We usually have this at 2. Usually we have at 135, and but of late we've just been keeping it at a singular time frame. And we can see the 2-minute. I don't even need to see a chart. The prices are dipping. So we'll see. I'm going to let you watch until the close. The public markets will close at 4. Let's see what they do. We're going to let you watch right up until about 4:15, and we'll see if we can get our sell off for the for the week, for our weekly objective. We were at our weekly objective, but I continued to play. So it's early in the week. If it was a Thursday, I think I would have just quit. But we got plenty of time, and we could clean this up in an hour. We could potentially, but that makes sense. All right, thanks. And we've been doing this a long time. I'm not from Wall Street. Proud of the fact. Thank God I didn't work for a bank. I'm sorry if you do. I would have not been happy. Um, and I'm not from Madison Avenue. No, far from it. Um, and we like to teach just real people, real people that are tired of them ripping us off. It's kind of also my way of getting back at the bastards. If I can help you demystify this part of the markets and get it done, that's what I want to do. But you will have to do it, right? I can't do it for you. I can give you, but you'll. This is learn to trade your game. I'm not going to swing the club for you. I can't, and I won't. But you'll get much more out of it. That's again where the confidence comes from, right? And that's in everything. You'll be much happier for it. Let us know if you want us to plug any of your markets or any of your tools. You got a stock that you're on, or and you want us to plug it in and get a view. I'm happy to do it. And even just tell us the interval. Happy to do it. In case we lose anybody, I will come in to answer any question, and I will be here at the very tail end. If um, if you should leave, I just want to say thank you for taking some time to come by. And and I don't have an Ivy League education. No, no, I didn't go to Yale. I didn't go to Harvard. Harvard. I didn't park my car in Harvard yard. No, no, I didn't do that. Nope. Grew up on the streets north of Boston, and and I spent 20 25 years teaching teaching surgeons how to work with the most advanced surgical instruments of the day. And I never even had a biology class. So go figure. So there's no limitations here. There isn't. Um, the most successful investor ever is Jim Simons. Look him up. He is embarrassing Warren Buffett, embarrassing Jim Ricketts, all of them. Nobody can hold a candle to him. Watch his videos. He was 41 years old when he started. He just recently passed away, unfortunately. He's the grandfather of quant trading. He started in 1981. A company that is closed to just employees in 1995 called Renaissance Capital. Jim Simons. What was his interval? He traded intraday, intra evening. Even that sidekick of Buffett's, Charlie Munger, said, remarkable. He said, I don't know what he's doing, but he's doing a great job at it. He said, but he can't trade long term. He's not an investor. Okay, that's fine. He embarrassed them. So, if you want to, you know, I'm an investor, that's going to impress somebody, have at it. And they're not going to impress me. I could care less. Who cares? Right? If you can extract cash flow every day and get done what you need to get done. Now, Simons he didn't give an amount, but he did say that if he had the, the billions and billions, maybe, responsibility, that it might tax his approach. So my interpretation of that is, which is the case, when you're trading intraday like this, you have such a huge advantage over them. I mean, it's ridiculous. They don't want you doing it. They don't. They don't. That's why they don't. They absolutely do not. It's not in their interest. So you got to make a decision if it's in yours. But I'm going to say thank you. And I'm not sure when we're going to punch up again next, but we're going to let you watch right up until about 4:15. Then we'll shut down. Let's see if we can burn off this little trade here. We can burn off that drawdown, and see if we can catch a little bit of a sell-off here in the last 30 minutes. I do think in the evening, it does look to us like this market is stalling out, burning out. Both the Nasdaq and the S&P. What should be giving you pause is that skew. That skew tells us that the big money, they're doing two things. They are selling calls to the speculators and they are buying puts. That 166 reading is very high. So it's coming. It's coming. And they don't usually do it for like a 2 or 3% correction. It could be 5%, 10%, 15, 20. You never know. But they don't usually do what they've been doing. And they've been doing it for an extended period of time. So we do think that there's going to be a pretty sizable correction here. We need to see that VIX. The normal VIX, 30-day VIX, is 18 to 22, and we're below the low end of the range. So it's getting dicey. Again, we just want to say thank you for everyone that stopped by. And you push the like and the notification button. Two things happen. One, the like button helps us with the algorithms. But two, when we punch up, you'll get a notification. And can't really get on a set schedule because we just can't get on a set schedule. I can't. Too many other things. And but when the market's open, you never know. Could be in the evening, could be in the wee hours. When it's of interest, we'll try to punch up and try to answer some questions. And again, one of the first things that you'll have to decide, when you get in the Q school that we say is, how does this fit into your life, right? You've got to figure that out, and I can't do that for you. You got to do it yourself, and what days do you want to trade? How much time do you want to devote to this? How much capital do you want to put in toward it? That's a very individual consideration. What we do know is that it's much easier usually to trade during normal session hours than it is in the evening, for sure. Market's much more liquid, and usually the volatility early in the morning, 3-4 o'clock in the morning, though, can be a really nice time too. Probably better than the evening hours. But the evening hours are usually, pretty quiet and illiquid. And that's the indices. Of course, other markets, even more illiquid. Like never trade nat gas in the overnight session. Not a good idea. But again, thank you. Any questions? Fire away, send them to email. You can call me 9 a.m. to 9 p.m. any day. And if I'm free, I'm going to pick up. If I'm not, I'll get back to you. Just leave me a couple of times, and I'll confirm back by text and call you at that time. Otherwise, we wish you the best. And if you're getting it done with whatever it is you're doing, keep doing it. Just keep repeating it. Rinse, repeat, rinse. If you're not, stop, think, look around, and if we fit into that picture, you think we can help you, reach out. If not, not a problem. Have fun.